next, kind of going to discuss more around how the friction in cross-border trade, and we've been touching on this a lot already, but how it could be overcome by access to trusted organization identifiers, and how organization identifiers can be built and made stronger by the use of open data. So a couple of new panelists joining now. So we've got Shrikant Patil from DigiLE and Rahul Shingle from TazaPay. And again, apologies if your names were not said correctly. But as we did before, by way of introduction, could you please each sort of give one or two sentences on why you're here today and how this topic links to your work? So if we could start with you, Shrikant, and then Rahul.
Thank you. It's such a pleasure to be here. And, I heard a lot of exciting statements and insights a few minutes ago for the last few minutes. So very, very energizing session for me here. For me, I've been working with open data for a while. I used to lead open banking practice for a couple of consulting firms in the region. It is one of the topics which is also very close to my heart because I did a lot of work on the digital identity and the association of open data with digital identity. And today I run a company called DigiLI, which is primarily focused on solving for the asymmetry of data, which is between the borrowers and the lenders or cross-border trade, or essentially organizations, specifically small, medium enterprises who have a challenge of solving for the asymmetry. And we power this asymmetry through artificial intelligence. So combination of many things, but this topic of open data is extremely close to what we are doing, and totally believe in this, that it will solve a lot of use cases and many challenges.
And Rahul, do you want to introduce yourself and sort of your links to your work?
Hi, good morning, everyone. My name is Rahul Shingle. A lot of familiar faces here, so hi to everyone. I am the CEO of a company called TazaPay. We are a cross-border focused payment company based out of Singapore. We are 100% cross-border only. We support enterprises, mid-market customers, SMBs to be able to collect money seamlessly from their clients using real-time networks, local payment methods without the need for creating local entities anywhere. We operate as a merchant of record. We are about 4 years old, venture funded. So cross-border is what we enable, and data is always the missing link from a risk perspective, from an AML perspective, from a compliance perspective. So very interested to discuss that topic. I've always been in payments, was at Stripe before this, leading APAC, and prior to that PayPal for 10 plus years. So this topic is quite close to what I do on a day-to-day basis, and experience over the last 15, 20 years in this specific topic.
Great. Well, yeah, thank you both for being here today. So to kick us off, Shrikant, it'd be great to get a brief sort of summary of the type of identifiers that exist. And then I'd be really keen to hear what role that you think these identifiers should be playing.
Sure. So, again, when there are multiple thoughts around this. Of course, one of the identifier is LEI, legal identifier. There are digital identities which are coming in. So this particular space is evolving very fast. And one of the things we are seeing, which is very interesting, implementation of digital identity, which is SyncPass, and which is also being replicated across multiple countries, is not only that you have the identifier, but you also have the data association with the identifier. Now, a lot of identifiers today, which we see, are at the national level, and probably LEI it's at only one at the global level, which is what we are seeing. But the association of the information or the data which is around about the entity, and I'm purely talking about entity here. Of course, there are similar challenges exist for the individual. That association needs to be strengthened, and there is a gap today where we could create these kind of identifiers and then create the association. So those should not be thought separately; they should be brought together. Of course, we see a lot of great implementation of digital identities across the world. Uh, we should not just stop at individuals. We should roll it out for at the national level for the entities also, and that will be a game changer for a lot of businesses to move transparently and then share the data. We also need frameworks which are going to be the issuer of data, certifier of data. I think Holly spoke about the quality of data before a few minutes ago, and that's essential that we have ability to certify that the data which we are going to use is pure data. Today, one of the big challenges we face in the AI world is that AI is going to run out of data to consume, the pure data to consume, because a lot of new data, which is Gen AI data, is being pushed on the internet. So we have to solve all of these challenges. I don't think there is one solution, but it has to be collaborative. But the cohesiveness between the data and the identity and the identifiers have to be established, not just roll out just the identifier as a concept.
Yeah, thank you. And so, yeah, really important that identifiers are good, but just that one part of the story, and it's the broader data. I think it's really useful way of thinking about this. And so, Rahul, keen to bring you in as well. So when you're providing payment services to MSMEs, do you think that these services could be even better and more inclusive if trusted identifiers were better available?
Yes, certainly. One of the big limiting factors of servicing SMBs today is finding a scalable way of onboarding them without getting burnt. This is the challenge for any payment company. We try to do product-led growth where we do self-onboarding and let them come in and manage risk using transaction monitoring models. In markets where there are these open identifiers available and we can verify the legitimacy of the merchant, like Singapore, for instance, you get very little level of fraud because a lot of checks are available. You can do sync pass and get the data from ACRA. A lot of the similar data is not available in other markets, for instance, in Vietnam or Indonesia, and payment companies find it very difficult to onboard and service those SMBs. And ultimately, for us and for whether it's a marketplace or a payment company, there are 3 or 4 sets of data which are quite important. First of all, you need to establish the merchant is who he or she is claiming to be. Secondly, they are selling what they are claiming to sell. Thirdly, their business is legitimate. And really, the only global open data format that you have is sanction screens, which is one thing which works, but it is so shallow. It's just a name, and most of the time there is a false positive. And with the amount of work us and any other payment company have to do, the amount of manual work and the documents we have to collect is just not commensurate with the day and age we live in. And this is quite a solved problem, I feel, in US and Europe, where common ID parameters are quite easily available. US has VerID and Europe has their own data pools, but especially in Asia Pacific, where the market is so fragmented, it's quite bad. Let's take in India as an example, where the what's popularly known as India 2.0, the Aadhaar stack, has solved the first problem, that you are able to identify who the merchant is claiming to be, but is still very difficult to verify. Are they legitimate? Are they really selling what they're claiming to sell? Are they really? Can you make sure that they will not do any sort of nefarious activity therein? And for me or any other payment company, that is more important. That first of all, verifying identity, which is increasingly getting easier. But how to identify whether this person is not going to be up to any sort of monkey tricks, I think is the biggest challenge. If I had to list my top 3 challenges, that will probably be one of the top 3 challenges, and do it in a systematic and scalable way.
What might be the other 2 challenges, can I ask?
I mean, the other challenge is more nothing to do with data, but it's about how to keep fundraising at a good pace. It's nothing to do with data, but if that's not the third chat. But yeah, this is we consciously then try and stay away from SMEs because we are very difficult to find a scalable way of onboarding. There are some companies who've done it well over the years, PayPal and Stripe, for an example. They found out they've got enough scale now to have transaction-based patterns to establish who's okay, who's not okay. But for startups like us, it's quite challenging to be able to do this. And countries wherever. So now when we choose which market to launch in, the first thing we look at is, are there enough identifiers for us and enough markers for us to identify the legitimacy of a merchant that we're going to onboard.
Yeah, thank you. So are there, just kind of building on that, are there some examples or particular countries where there are really good organization identifiers, which are a good sort of example to look to?
I think Singapore is a good example, but it's so tiny a market that it doesn't really move the needle for anybody. But Singapore typically has a lot of good identifiers. You can look at the company database. You can get ACRA reports. You can you have SingPass to verify the identity, and also the framework is such that the legal framework that if in case the merchant of the business does do something wrong, there are repercussions. Other markets is not the case. It's very difficult to go after these merchants. So I think the countries which have done a real good job and where we feel quite comfortable are Thailand, for instance, where there's enough data available to make a good assessment. Singapore certainly, Australia certainly. India is a little bit of a mixed bag. You can verify the identity quite easily, but very difficult to identify the real legitimacy of the business and whether this merchant is going to turn rogue or not. But we think, surprisingly, even Vietnam has done quite a good job on this front. There are enough data markers now for us to feel comfortable when we are onboarding customers. Some countries where we still don't feel very comfortable are, for instance, Philippines as an example, or Malaysia as an example. India is always a bit of a 50-50. We are also quite impressed with what's happening in the Middle East, with enough data available there to make to feel comfortable.
Great, thank you. It's always good to sort of get some tangible examples, I think, as well. And just building on some of the things you were saying around like the cost as well, I might come back to you, Shrikant, here. Like, how do you see the costs of implementing open data frameworks compared to the money that can be saved or the opportunities that can be opened up?
Let's take simple statistics, right? Today, what Rahul was saying about small, medium enterprises, and we heard that as a echoing sentiment through these sessions. Small, medium enterprises suffer the most because the availability of data. So if you think about the asymmetry hits them the hardest, right? For the large corporations, the data is easily available. People can actually look up these information. They have to publish all the reports. But for small medium enterprises, which could be in the form of proprietors as well as partnership firms and private limited companies, some of them are even listed companies, many of them now getting there, and we see that is an enhanced problem statement. So the benefit, today there is around $5.7 trillion of gap only in the emerging market for the lending, and which could lead to close to around 300 to 500 billion dollars of revenue for the banks and financial institutions, right? So implementing open data can really benefit many ways to organizations. Also, the speed at which, so today, even if I talk about mid-size or very dynamic uh, in fintech, which is lending to small medium enterprises, they take roughly a month's time. And one of the important aspects there is that they have to meet people. Now with open data, and we can really optimize some of these, digitize these journeys, and that's exactly what we are pushing for. We believe that artificial intelligence could help work as a co-pilot, not Microsoft Copilot only, but like as a co-pilot in the entire journey for lending, where organizations could leverage the predictive abilities of AI. And I'm not talking about Gen AI. I'm talking purely the traditional AI capabilities, where we could fulfill these gaps, and the benefits could be significant. Uh, Today, we see that some of these documentations and the banks have to ask again and again for the credit history, and credit history is again not available for many of them. So lot of challenges in the systems can be mitigated, and it's definitely worth it. What we need definitely though is a regulatory framework around consumer protection about data, because while we see, as Rahul mentioned, we are seeing a lot of proliferation or opening up of data across the world, right? We see in the Middle East, many countries are now starting to adopt the credit models, right? Africa is There are many countries which are pushing for robust credit models, because first of all, you need to come up with this data and then push for it. So all of these is this really happening very fast. Tremendous opportunities, starting with credit and enabling artificial intelligence. I think those will be benefits which will create significant changes in the transformative abilities of all the organizations.
Yeah, great. Thank you. And we've kind of heard there about quite a lot of different countries, experiences, and things like that. So I'm very happy to kind of open up if there's anyone else listening as well that is either from one of the countries that we might have talked about, or just has a different perspective or a question to share. I'll awkwardly pause so people can jump in.
So, Harriet, this is Shalini from India. So I'll just want to, and I've heard Rahul and Shrikant talking about open data, and Rahul's feedback on India is obviously, it's kind of true, because we've covered some ground, but there's a lot that needs to be covered. But in terms of the open data implementation in India per se, so we as a country, is so diverse. We're working with multiple regulators, and it's a country which is huge and has a very graded kind of a population, each at a very different level of financial understanding, digital literacy, right? So in that context, we've already implemented a project for open finance, which is internal to the country, but there is a lot to be for us also to learn and evolve it and take it to open data, as well as for other countries to emulate and learn from the challenges and the experiences we had while implementing it at a huge scale. So like what Shrikant said, open finance in India has been implemented. We have taken a comprehensive approach, though still kept it to a very regulated set of entities. And we have had some very early, impact stories coming in, with cost of processing coming down by 75% in some cases for financial institutions. The fraud related to banking data and financial data has become zero. So that's one thing which is really exciting, because in today's world with digitization, how do you ensure that the data, the statements or the account information that is being submitted is fraud-free, it's not tampered with, and you don't spend endless hours, verifying the authenticity of the data. So all that is one big impact that we are seeing across all financial institutions. And we are just, right now, it's more of an efficiency game, but going forward, as Shrikant was highlighting, we also expect it to increase affordability and accessibility to a large part of the Indian population. And I'll talk about, how we have implemented it as in my part of the panel discussion, but I truly resonate with both what Rahul and Shrikant told, expressed about India as a country implementing it, and as well as the impact open data can bring in for our economy.
If I can, Harriet, if I can just add one point into it, right? While we talk a lot about open data, we largely go in, after the financial data. And what I want to highlight here is that the non-financial data plays a very, very significant role. And the reason I'm sharing this is because when we train our models, we realize that, financial data has certain weight, but non-financial parameters can really create a good profile. So we create a predictive model for the behavior of a company, and then non-financial parameters play significant role. So when we talk about the open data revolution, we should not stop at only financial data. We should also look at data which is promoter, ESG data, social media data, what employee data or customers are saying about it. So I'm saying, like, this is a great beginning for all of us, a great foundation, but we are just getting started.
Yeah, thanks, Shrikant. And I think that kind of like comes full circle to what we're hearing at the start around the definition of open data that we're using here, and the importance that it's not just open banking that we're talking about, and that's where there's real value in that more cross economy and cross sector data as well.
Can I jump in with a question?
Yes.
As I love everything I'm hearing, thank you everybody for the contributions so far. Does it almost feel like we're sitting in those two things? What should we spend time on? Is it how we can use the data, so more on the regulation space, or is it on the technology space where we spoke about federated analytics in the session before, and this is like, what is the sensitive data, what is not the sensitive data? Because there's one giving people access to the system, and then it's also the other one in everything around making that, if we spoke specific about payments now, but that not having the false positive and the correct data. So the panelists, like, what do you think is the biggest blocker? Is that the regulation piece on around we can use data, or is it the guiding principles how we can use technology more? Do you see where I'm going with this? It's almost two sides of the same coin. So happy to hear comments, because here I'm coming from. This whole workshop is to enrich our guiding principles we're putting forwards. And that will be the next question we're going into. But just for what we've come so far, which of those two is it that we should spend time on?
If I may just...
First, that's a great question, Camilla. Thanks a ton for bringing that point out. I think in most places, collecting the data, as you mentioned, is less of a problem, because the merchants, we will not onboard those customers if you don't get that data. In many places, it becomes easier because you can get it from the source of truth. In US and Europe with open banking, you can get their bank statement with their permission. So there's no question of fudging, etc. I think a lot as a practitioner, a challenge for us is federation of that data. First of all, availability of data which is tamper-proof, I think is the biggest challenge. Once we get that, we are able to federate it. And so I think the bigger challenge is frameworks in place so that it's like ours and Shrikant's and the others are able to get access to this data, which is relatively tamper-proof and a single source of truth. Like, for instance, open banking does that. Open banking is not only a tool for enabling payments, but also getting the underlying bank statements and financial data. If something like that was available, it will make life much easier for a lot of us. Over to you, Shrikant.
So very, very quickly, I think, Camilla, the regulation can only play a limited role. I mean, my view here is that the industry has to thrive on the use cases which are going to create these opportunities. For example, banks across the world, DBS, PBVA, OCBC, all of them didn't wait for regulation. And you see the new age digital banks, digital only banks also thrive on the ecosystem play, which is again open banking and open data. So I would say yes, regulation is important more from a consumer protection perspective, but the use cases will actually drive it, because even if there is a regulation, and you see, it happened in Australia also, that there was a regulation and then banks took more time to implement it. It's happening across the world. So you would realize that unless there is a business case for those banks specifically to offer and make money out of those APIs or whatever they are offering use cases, regulation cannot really propagate open banking. Pure regulation cannot propagate. There has to be a business case.
Yeah, it's a good point. It's one that we're talking about just in the real-time payments as well, cross-border in general. It has to be that the profit-making element to it, or innovation will also stop. But so, Dion, I saw your comments about that with AI, that it has to be trustworthy. So just going to resound my answer before I hand back to Harriet. Sorry, Harriet, I bumped in here.
That's good.
Yeah, just a few comment on that one, Camille. So I think is one of the key player. I mean, so the alternate data actually is quite what can I say? It's like limitless, right? I mean, we can provide with a lot of data, but in terms of regulator, there's always like two approach, right? Whether I mean, if there's no regulation, it means you can try. Or second approach, if there's no regulation, so it means you don't do it, right? So how we can ensuring that the validation and reliability of the data, that is first. I think Rahul also made few points on how we stand and get some consent, also very important. But one of the key elements that, I mean, bank is, they hunger with data, right? It's onboarding, customer portfolio collection. I mean, all the aspect, fraud detection, they're always looking for data. But the thing is that we also doesn't want to have this garbage in, garbage out, right? I mean, many data that's always good, because we need to validate and ensuring that the data is reliable and also trustworthy as well.
Yeah, it brings back, so my background is data, so I used to sell data to the banks. I worked for Thomson Reuters and the banks used to say, like, you charging me for my own data. And I said, yeah, but the data you had wasn't clean, it wasn't trustworthy, you couldn't do anything with it. So I definitely think we've come so far without the data use cases, but we really need to find that the balance between the banks and the other participants in the sector, but with the security of the end user as the SME or MSME. Shalini, did you want to say something before I hand over to Harriet to round off this panel?
No, so broadly, the way we have seen it in India is regulations are required to kickstart, but they're more like enablers. So you set up a broad framework within which you set up the rules of the games, but not going at a micro level, keep it very macro, and let the use cases evolve. Like, so in India, for the last 2.5 years, we've seen the regulators taking a very hands-off approach. They have brought in open finance in the country, but they're not just jumping into regulating each and every aspect of it. A lot of new use cases are coming up. And in fact, some of the use cases we hadn't even thought about when the framework was introduced. How could data be used to enhance the well-being of a common, person in the country? And that's where I think the approach the regulators have taken, let's just wait and watch. Initially, let it happen in small groups, let the initial results keep coming in, and along with the impact, you also see the associated risks that come up. And that's when you take action. You also, and their approach has been let the industry regulate itself. So a lot of approach has not been the regulator taking that decision, what is to be done and not to be done. Right now, they're in a phase where they're saying, let the industry come together and define rules for themselves. ensuring that the use cases are not inhibited, at the same time keeping in mind the consumer interest, and they're keeping a close watch. So we know the regulator is there watching how the industry is working, what use cases are coming up, but they're still not in that phase where they want to over-regulate and kill innovation at that stage. So it has to be a balance, and you keep, kind of changing and tilting or, fine-tuning your balance as you move ahead with the evolution.
Yeah, thanks, Shalini. Thanks all. That's a really interesting discussion. I definitely resonate with that from my experience working in the government on open data frameworks in the UK and in Australia. It's around trying to enable rather than prescribe the types of innovation. But in doing so, it's really hard not to bake in certain things which might restrict innovation and uses as you go. So it's that evolving over time that you're saying there.